There'll be a lot of exciting things in it, but I think there is very little in the budget, and so not too many people are interested. And perhaps what little was there was brought out in the immediate post-budget discussions. But anyway, there are two young chartered accountants, Rishi and Kanika. They are working for the internal auditor firm that does our internal audit, Habitat Center. So we had requested them to do an analysis of the budget, what it means for the individual and what it means for the professional. So they will make this presentation between the two of them, and after that, of course, as usual, we'll have time for question and answers. So may I hand it over to Kanika and Rishi?
Thank you very much, sir. Good evening, everybody. I am Kanika, as already introduced by sir, and he's my colleague Rishi, and we happen to be the internal auditors of such a prestigious organization. So we are here to share something about the budget, per se, the salaried employees and the professionals are concerned. So what we admire about the Union Budget 2015-16 is that for the first time, the subjects of Jan Suraksha, which is the social security system, public investment, plug-and-play infrastructure, phased corporate tax rate reduction, restoration of cultural world heritage sites, green and clean India, and a law to curb black money and Benami transactions have been articulated. The budget, hence, as we assume, is a reflection of government's commitment towards change, growth, job, and social upliftment. So we'll just glance through the budget 2015-16. So there was an objective of stable taxation policy and non-adversarial tax administration. Fight against the scourge of black money is still to be taken forward. Efforts on various fronts to implement GST from next year. GST is goods and service tax, which would eliminate or rather eradicate all our indirect taxes, which is excise, customs, service tax, and only one tax will come into play, which is goods and service tax. No change in the rate of personal income tax. Proposal to reduce corporate tax rate from 30% to 25% over the next 4 years, starting from the financial year 2016-17. Rationalization and removal of various tax exemptions and incentives to reduce tax disputes and improve administration. Exemption to individual taxpayers to continue to facilitate savings. And the rate of service tax has been increased to 14% from the existing rate of 12.36%. This has been done to facilitate the transition to GST by the next year. There's a joke which had come up after this clause, the particular clause of rate of service tax being increased from 14% to 36%. There was an instruction or a direction which was being given to males so that they can appreciate their wives for, making good food, that, to compliment their wives, that they make good food otherwise, and they look beautiful otherwise, even if they don't go to the parlors. Because in any case, the increase in service tax rate is going to impact our dine-in outside in restaurants and the beauty parlor services. So this was a joke which came immediately after this rate was increased. So we'll just go through the broad themes which the budget gave us. There are measures to curb black money, job creation through revival of growth and investment and promotion of domestic manufacturing, which came out as an initiative of Make in India, improve ease of doing business, which has the minimum government and maximum governance, improve quality of public health and life, which again came as an initiative in the name of Swachh Bharat, and the benefit to middle class taxpayers. Now we'll take up these broad themes one by one, and then we'll come on to the middle class taxpayers, which is our last point here in the themes.
Good evening, everybody. I welcome everyone present here. Our finance minister announced plans for a new law to tackle black money with tough measures. Few of that we are discussing here, like generation of black money and its concealment to be dealt with effectively and forcefully, investigation into cases of undisclosed foreign assets to be dealt with highest priority, evasion of tax in relation to foreign assets to have a punishment of rigorous imprisonment up to 10 years. It is not a compoundable offense, have a penalty rate of 300%, and the offender will not be permitted to approach the settlement commission. Non-filing of return or filing of return with inadequate disclosure of foreign assets to have a punishment of rigorous imprisonment up to 7 years. Acceptance or repayment of an advance of rupees 20,000 or more in cash for purchase of immovable property to be prohibited. PAN being made mandatory for any purchase or sale exceeding rupees 1 lakh.